GM, and welcome to Soul Brothers Pod, the finest podcast on Solana, where it is our job to throw you into the Solana rabbit hole and show you around in our exciting ecosystem. My name is Simon, and today I'm joined by Colin. Colin, welcome to the show.
Thank you. Thank you. I really love that intro song, how it scales into high intensity. It's so good.
Let's go. And it's also feels comfortable by now because we've been doing this shit for a year. And when I hear the song, I'm like, I'm getting ready. I'm getting ready for some spicy conversations. Colin, I'm happy to have you here on the pod. You're the co-founder of MetaDAO. You guys are focused on funding the next big thing with ownership coins, as you guys call it, on your website, if I'm not mistaken. And you're obviously a launchpad on Solana. You are doing a lot of ICOs these days. There have been some prominent cases in the near past, like Umbra, who raised a bunch of money. There was Avicii, I think, as well before that. There were a few big names out there that have been making waves. And the two of us, we met actually a long time ago, if I'm not mistaken, somewhere in Kuala Lumpur.
April, May of
Yeah.
last year.
Yeah, right. So it's been a while. It feels like a long time, honestly. I don't know about you, but since then a lot happened in the space, in personal life, in business life. So how are you doing these days? How do you feel with before we go into the weeds of MetaDAO? How do you feel with how things are going with MetaDAO and with crypto? Are you as bullish as you've been 1.5 years ago when I met you last, or did anything change in your mental view
Yeah.
of things?
Yeah. I mean, like a lot's changed. I mean, but that's kind of the experience of crypto, right? Like, I mean, if this had been 2.5 years ago, we'd be talking about NFTs. So, like, but no, like I feel good. I think you've kind of got to weather the storm and the experience with it, and then you kind of have this understanding of the direction that you want to go. And crypto is programmable money. Are we getting closer to programmable money? I think every year the answer to that's yes. So that's always exciting.
Yeah, I guess so. But I think this year, for me at least, Colin, has been a year of a lot of realizations. And now, obviously, end of the year, you start to reflect. You start off, okay, what did we actually learn from all the things that happened in 2025? And I think, yeah, tokens have been fucked, man. Like they have been, like we haven't figured it out yet. We've been building in this space since more than a decade. We've went through the ICO bubble in the early Ethereum days. We came up with Solana. We launched a bunch of NFTs. That kind of worked out until it didn't. Then we did a bunch of meme coins. Obviously, that was much short, like even shorter than everything else. Meme coins came down to a lifespan of like what 5 seconds now, like literally seconds. So they go up, they go down, they're gone. So they don't really work as well, at least not to have any sort of meaningful ownership of something, right? We had creator coins, we had all that kind of bullshit, and it all went to nuts. Let's be frank. So I think my core thesis for this year is that we haven't fucking figured out how tokens work yet and how to properly use them. And then MetaDAO comes and it's like, guys, ownership coin. I think we got it. I think we understand how it works. Do you feel like you guys are there? Do you feel like this is like fundamentally changing things in the world, how to raise capital and how to distribute ownership between shareholders and how to govern companies? Is it figured out to 100%? Are we still fucking around finding out a little bit? Be honest, like where are we here?
Yeah, I mean, like if you get anybody that comes on here and says that they figure something out 100%, then like discount them that amount. Like discount them by 100%. No, I mean, like I think we're taking a stab in the right direction. I think that you have a novel governance mechanism here. You can start to take, like give that at least some sort of opportunity to say that this is a step in the right direction. I don't think you won't hear from, at least from Profit or I, that Futargi is a silver bullet, right? It doesn't solve everything, but yeah, I mean, like one of the biggest systemic issues that I see facing crypto right now is that if we get RWAs are coming. They're on there. If we get tokenized equity, then it effectively wipes out a decade worth of experimentation, because then, it turns out people have wanted this. We've existed in legal gray areas for as long as we could, or regulatory gray areas. And, you know, Big Daddy comes in and it's like all of those tokens, all of that experience, everything that you've done up until this point is just effectively like, well, that's when you guys didn't know what you were doing or what you could be doing. So I think this gives it a very crypto native implementation that is not clearly tokenized representation of equity, right? Like because of the novel mechanism, because it's crypto centric, because of all these things, it's smart contract based. Yeah, like you have a chance here that says this is a very crypto native way to make sure that it has some emergent properties that most mimic or most look like ownership. And that's why I jumped at MetaDAO. It's like you could actually do something with this. You could do something with governance and oversight, and that's pretty cool. And new in crypto, and that's cool for me.
Yeah, I get that a lot, especially as a, tech accelerator myself. Like I love to front run whatever the fuck the world is doing, and be already doing something that they will do in 2 years. Like I like that stuff, even though it's painful and it doesn't work out the first time you do it, and there's a steep learning curve involved in in these kind of segments when you're so early stage. And we've been doing this with tokens for a long time. And as you said, sure, Big Daddy comes in and might be saying, yeah, you've been trying things for a decade and now fuck all that because actually it didn't work. That would be my counter argument now, because actually Big Daddy might have a point. Like, because so far
it's the point. I mean, it's totally true, right? It's like, hey, you've enriched a lot. I mean, like even in like the low float high FTV,
yeah,
you've got more tokens out there. These are quality, capable teams. But if anything else we've proven is you just enrich a few people, and like you're still, like there. I set up an RSS feed when people were like, "Oh, crypto's full of scams." I set up an RSS feed in Discord for the SEC's like injunctions and filings and everything like that. There's not a day that doesn't go by that like a new feed, right? Like fraud committed, and that's traditional financial. It's just, it happens so frequently that nobody likes to really report about it, or, it's not as big of a deal. And crypto is just a hyperbole of that. So I don't think that there's anything necessarily new here that is abnormal. It's just that it's very high profile. And then there's such little like surface area in total, right? There's so few teams, there's so few like material, like scalable businesses, right? Like Polymarket and, and those are like not Web 3.0 either, right? Like it's not quite, there's some stuff that's on chain, but it's not completely on chain DeFi app. So.
Yeah, I think one important point is that we had not right now, but we had a lot of capital flowing into the space, throwing money at shit because it was very lucrative for a period of time, and then everyone came in, right? So we saw crypto VC. We didn't have crypto VCs before. Like they came after the gold rush, right? And there were a handful of them early on, but really after Ethereum ICO, that's when it kind of began, which makes sense, because then you're like, okay, actually you can build startups on this. This is a new internet economy. The whole thesis changed, right? From Bitcoin as like this kind of stupid currency, now value of store of value, to this smart contract platforms and so on. So we can actually build business on top that bit. But then so much money came in that we built a bunch of businesses that are mostly bullshit, probably. So it was kind of a money grab. And then obviously they failed because they raised far too much money for what they promised. So most of these ICOs, how much they raised? They may raise like 30 millions, 50 million, and then they just disappeared because they couldn't handle the responsibility that comes with the money. That brings me to a point as well. When it comes to MetaDAO and to raising tokens on MetaDAO, which is another controversial thing that I sense from the communities and markets, which is that you're basically having a company that's raising quite a lot of money at a fairly high valuation, and then the token goes out, and the token trades at a fairly high valuation, but the company itself is like so early stage, right? It's like really at the beginning, mostly even pre-product market fit, I guess. But the company went public, right? So the token is out there, but it's also at a high valuation now. So the pressure that puts on the founder must be quite tremendous, is what I could imagine as a founder with a token, that you have this high valuation, but you just made 10K of revenues maybe, right? So do you think there's like some issues over here as well, that there's like an insane pressure to execute like crazy to justify the valuation that you just have? Is it too much, or do you think it's actually good? Which could be also a point.
Yeah, I mean, like, I think you have to be insane, clinically insane, to build in crypto in the first place, because regardless if you have a token or not, right? Like, I mean, it's unprecedented the amount of connectivity that a community has with its, like, the builder, the constructors, the business operators. Like, it is unprecedented. Can you imagine if Zuckerberg building Facebook, like everybody on Facebook could just DM him and then like complain if he didn't respond to it? So like, I think that there's like that spectrum of it, and that should get better over time, because like it's unrealistic to have these expectations and these pressures. And it's quite interesting that we've done that. But yeah, like, I mean, I like to think that there's two, like, you either start with an early token or you're going to end with a late stage token, and either way you're going to worry about price, or obsess about price, right? And so like it's a fundamental question of like, do you want to worry about it now when like you're not trying to justify like a $250 million valuation, because the private market has priced you at that, and instead start with a early stage like size, right? Like, I mean, if Coliseum does a 7% investment at 250K, puts you $3 to $5 million valuation, and a lot of MetaDAO tokens are trading at that, which I think is probably pretty fair. In a broader ecosystem where you launch a $1 billion protocol. So like, I think that there's more room to grow, but yeah, obviously like early stage, there's a lot of unknowns. And I think that you do get with crypto, and this is stuff we're trying to figure out as well. Like, it's not a silver bullet, but you want a cap table that believes. And I fundamentally believe that you could probably discount 90% of what people are talking about and yapping about. And you really care about probably 10 to 15 holders of your token at a small market cap, right? That those are the guys that are going to, like, if they lose faith, you're screwed, right? So it's not, you're convincing a much smaller subset of a user base that has faith in your ability to execute and directionally orient. And then if not, those people could also churn in decision markets. So you end up creating a cap table of people that are willing to accept the risk, assuming that you're like delivering and promising the right way. But yeah, like, I mean, I think there's an urgency across all of it, because crypto hasn't found its product market fit yet. I mean, you could argue stable coins and like payments, but then
there's a few, but
like, have we hit 200 million daily active users across like an application that that you're not describing the blockchain, in a cult-like fashion as the killer feature, right? Like, it's just like, no, this application just happens to use Solana, and that's cool. And it uses Ethereum too. And it uses all these other 60 other things. And we've got 200 million daily active users. So yeah, I think that you're in a high pressure situation. Just like I think, if you're in AI startups in Silicon Valley right now, 996, man, like that stuff is going on there. So I think it's just, it's more par for the course with the industry that you're in.
I think it's good to probably take a step back. I usually like to just jump right into it, which I did right now, I realized. So maybe we can take one step back, and for myself and also for people that are not 100% familiar, describe a little bit the differences here than launching with other launch pads, right? Because MetaDAO obviously has some distinct differentiators, and I think Futarchy is probably the most interesting one to talk about. So let's start with the actual token fundraise and the mechanics around that. Let's say I want to launch my token with MetaDAO, and I have a good project, and I have a appealing case, and I submit, I guess, a form. I think you guys have an application form or something in your docs that I saw. So you send that in, the team reviews, reaches out, you guys have a conversation, and you agree, okay, the token shall launch on MetaDAO. Where do we go from here as a project? Just very pragmatically. I mean.
So, I just want to explain to everybody how it all works, what the legal structures are, and, make sure people understand what they're signing up for. I think that's probably like the biggest barrier for a lot of it, just from the initial conversations, is people's understanding or comparison with other launchpads. I like to call ourselves a fundraising platform, so I'm not commingled with launchpads because there's a lot of differences. But what we do is you're gonna hand over your intellectual property and intellectual property rights. We're gonna create a segregated portfolio entity with that, and that's where those rights transfer. And then that intellectual property is now governed under futurity mechanisms, decision markets.
Right. So let me before you continue. Basically, as a founder, you willingly give your baby to someone else because you trust them to take good care of it, not because you trust them personally, but you trust the model behind it, which is futurity and market-driven decision making. Okay, that is it's a bold decision to make as a founder. I think you have to believe in it. But
and MetaDAO is highly opinionated. This does not work for everybody. I don't know that it should work for everybody, but if you are crypto native, I think that this starts to make a lot more sense. Especially in the world of decentralization, it's just something that should be at least understandable, right? Like the Solana validator governance is not, does not adhere to foundation principles, right? Like now it's all the validators, they have to agree and they got to figure it out. So just make sure that that's understood. And then we talk about configuration, right? Like how much team allocation do you want? What are you trying to raise for? What's your monthly burn? Because once we set up the initialization for this and we get it going, there's no turning around once we start that fundraise. We talk about the pragmatics of it. Like we want to know what your burn rate is. And you should really consider that. Like if you were to raise your $1 million that you need to raise, it's not you right now. Yeah, I can make it work with $2,000 a month. It's like, well, if you actually get this money, what's it going to look like? And then, how much do you need to raise? These are all important questions for us because this money isn't accessible directly, right? Things have to go through a proposal. Things have to use the futurity mechanism. So you can change it, but raising a proposal can be, it just takes time to do right. And I'd rather, make it smooth sailing, at least for the first 3 months, 4 months, so that we don't have to really make any adjustments. It's just that. And then it's like, okay, well, what's your timeline for it? And then getting everything queued up with the front end, making sure that the smart contracts are deployed, everything's ready to go there. We do some cross promotion, but it's like, hey, we got to get this out to people. It's a lot of just probably core business thesis of like, if you were to raise today, do you need to you probably don't need to raise $10 million, right? Like you should have some pressure to figure out what you need for the next 18 to 24 months max. And, you can always fundraise again with MetaDAO. So I think a lot of it is correcting over raising or a misunderstanding of like what happens when you do fundraising. And so it's a conversation around that. And then, like 4 days, like we kick off the launch. We say, here's the date that it's going to start. It goes for 4 days. It's not first come, first serve. It's pro rata, uncapped. We've got some changes to the programs that we're making right now, but in the future it's just going to be uncapped because people, you've seen it. People are playing games with total allocation, so we had to figure out a way to adjust for the games that people were playing, and and I think we've created some pretty cool primitives there around it. That the team has a spending limit, which is their burn. So there's no questions asked. They can withdraw that from the treasury each month. So, again, trying to make it easier for founders to have less friction for it. the mint authority and the control over the token is under Futarchy governance as well. So if you need to do a fundraise, MetaDAO's done this where we mint additional supply, you go out and sell some tokens to the market. And then, we're working on some cool stuff like optimistic governance, which means that the team kind of has the benefit of the doubt that they have 3 days for something that can go through and anybody can raise a challenge to it, which I think is it's cool, right? Because we really swung far right to the favor of the investors, but there's some feedback, like you said, like you have to be pretty aligned to give up your company. So what's the trade-off?
And this is a point that I heard as well here and there amongst founders, which is also valuable for you, just as feedback from MetaDAO, I guess. That the good founders, maybe they don't want that. Maybe they want to build in private with full control over what they just raised, the VC money they got in the bank and so on. Like the really good ones, they're like, hey, I got this. Like I'm confident in myself. I don't need to wait for the market to decide on the decisions. I did 5 raises before. I had 3 exits before. Let's say you're that kind of person. And then you're like, yeah, I don't want to be under this constant pressure of having to raise proposals and get money out when I need it and have to wait for the proposal to go through. And, you're at the mercy of your token holders, I guess, at the end of the day, of the Futarchy voters.
Yeah, to the market. To the markets, because like, remember, I don't have to be a token holder to come in and trade, right? I just need dollars. So if I have dollars, I can come in and play.
True.
Yeah, and to be fair, right, like to address that feedback, right? Like we have been listening. We have created this. It took a lot of money to raise proposals. It meant that teams, like couldn't spend money without a proposal. Well, now you can do that. The spending limit means that you can do that. We even baked into the program now where a team raising a proposal by default has to be like value destructive for it to not pass. So say like, the way that the proposal passes, pass has to be higher than fail. But if pass and fail are the same price throughout the proposal period, right? The market doesn't have an opinion. It's saying 50-50. Well, let's defer to the team in that case. So now that if the team raises a proposal, it doesn't have to meet the stringent requirements there. So I think we are correcting a little bit better there. I mean, obviously there's a point of friction, but the point of friction exists because teams have been running off with money far too frequently.
Yeah. And I guess
you're right. You're right on the, like a high quality founder that can raise from venture dollars that wants to do it that way. I have no argument against doing that, right? Like
you don't want to replace that future, right? Like you position yourself as an alternative fundraising method for other kinds of.
Unless your VC come month 12, everything's going well, and then they go, when are you going to make a token? And then you go, well, shit, I just raised at $1 billion valuation. My token can't trade at the like 150 million that has the marginal demand for the token. So I got to go out and sell 2% of the supply. So now you've signed up for a 4-year down only token, right? And that would be my argument against, like, if you go the VC route, do not ever plan to launch a token, because if you do, you're probably going to have a bad token design.
Right. Yeah. Okay. So who would you say is the ideal company for MetaDAO and for an ICO on MetaDAO? What does it look like? What is the ideal stage of it? What's the ideal founder kind of persona that we're looking at? For like, obviously there's no right or wrong answer here, but you have seen a few launches. You're, co-founder of the protocol. So I think the question is probably best asked to you, if to anyone.
Yeah. So I think that, like post product is probably the best, or like really close to launch is probably important. Even if it's a test app, if you're on mainnet, which almost nobody should have an excuse not to do, you don't need to wait for an audit to deploy a program to get it out there. You just can constrain it so that people don't, put heavy asterisks everywhere, right? Like I'm willing to go out and test, throw $50 in protocols in places if you've got the app, so I can provide you feedback. But post product, and then, probably crypto DeFi native, right? Like it's probably best in protocol for these things. And and you probably want some traction, because like really, I think Avicii displayed this best, that if distribution is your problem, token is probably a very good solution for distribution to get people interested. So yeah, like I think that's probably the way that I would look at it. That being said, I think if you're doing something novel, I'm really interested in it. I think there's a lot of the same that happens, and obviously for good reason that is that. But I think novel's harder for venture capital to invest in because there's no like prior for it. And so like if you're doing something interesting there, I think that's probably good.
Okay, cool. Makes sense. And then now we kind of covered the process of setting everything up. We talked about the proposal, kind of voting and everything. Can we, for once, just say one more time what future key is and how it works? I know you did that a few times already, but because we're always talking about, the market is making the decision. How the fuck does he do that? And who actually makes these decisions? Like really? Like what kind of people are we talking about here? Because you say they don't even need to be token holders, right?
Yeah.
It could be anyone. So how does the reality today look like when it comes to future key votes to these companies that you already launched?
Yeah. So, like the way to think about it is there's like a decision that needs to be made, and then you're asking what would be best for the price of something, right? Like, I hate this example, but it's so recent that it's important that I use that one instead because it's tangible. Lululemon's share price jumped 11% the other day on news that the CEO was going to resign, right? That just shows that the market believes that the CEO resigning is good for the value of Lululemon, right? So all you have to do is imagine and flip it around and say, well, let's say the CEO didn't know whether he should resign or not. So like that shows you that the market would be, if you could create a token that the future would be you resign, or the future would be you don't. And, like you ask people, would they want to buy more Lululemon if I wasn't there? That is what we use as decision markets. So we can start from the end result of the share price going up and say, like, could we work this into a mechanism that would allow us to do that? Prediction markets are an example of that, where you're asking for a future event. Decision markets are just a slight spin on prediction markets. We don't ask you to commit capital and evaluate 3 months later on whether it was a good decision or not. But yeah, so Futarchy is just using markets to help make decisions where price is the arbiter, right? Like price is your most important factor. So it works really well for businesses because, businesses are all about delivering shareholder value.
Cool. Okay. I think that makes a lot of sense. And then what kind of traffic do you see these days when it comes to the volumes on MetaDAO votes? I'm curious, like, do you have any numbers in terms of like volume on votes these days? And how many votes do you have on a typical week or day? Like how much is going on? Because obviously I've been observing what MetaDAO is doing, but I have lacking in actually participating in votes myself. So I'm curious right now to hear what's the state of MetaDAO today and governance decisions.
Yeah. So like, and I think that this got lost somewhere along the line because we were building a governance protocol. So people were like, oh, well, you must be governance maxis. We're not governance maxis. Like in a best case scenario, you may never touch Futarchy as a business. That's great. That means the team is firing on all cylinders, that there's no structural changes, that they're not spending more money than they should, and that like you don't need to raise more money or dilute the token.
Basically, the plan is working as you initially intended.
You have the best configured team, and like if Jito had started out as a Futarchy, they maybe never touch a governance decision, right? Like everything is just so. And Futarchy exists in the best worst case scenario is a ripcord in case something weird happens. That's what it's there for. But it does not need, every minutia does not need to run through the proposal. You just need to be able to be corrected. The market could come in and say, Simon, we don't think that your new investment in investing in a zoo is best for Soul ID right now. Like we don't know what you're really thinking here. So like we need to talk about this. So yeah, like there was recent proposal from Umbra to do a security audit that had $522,000 in trading volume. There was, I mean, MetaDAO did its
pretty good.
OTC fundraise was a recent one that had 1.1 million in conditional market volume. There was there were a few other that came through, smaller numbers relative to the market cap, but buyback Loyal was a token that launched and using some of the funds raised to establish a floor price on the token. That traded 142,000 in total trade volume there. But yeah, like that would not be a good proxy necessarily for is Futarchy working. It's just like, are these businesses directionally going in the right direction? Are they building something that people are using? Are we like maybe more decisions is more signs of controversy, right? Like that like there's a lack of understanding or of direction or orientation. But yeah, it's hard to say. And then like if you come into a market and you have no additional information about the price, right? Like say you come in and you know nothing about Apple and you look at the share price and you're like, I mean, okay, that's the right price. Well, in token voting, you always have a directional vote, right? You can vote yes or no. In decision markets, if the price is correct, like somebody else has said that this is the price, you don't have to trade. Right? Like you just agree with that price. So if you don't have alpha or new information that comes into the market, then your best course of action is to not trade, because that means somebody else, like will trade against you. And maybe if they're better informed, you're going to lose money from participation. So yeah, I think capital at risk, the cool thing too is people can be very loud in the social component in the community, but then like nobody shows up to trade, and you're like, oh, so it's when we put our money where our mouths are, it turns out, like nobody was high conviction on what they were talking about.
Okay. And when it comes to existing projects, that's one more thing that I have on my mind, because I haven't seen this yet. Is there any way for existing token projects to work with MetaDAO? Because I just see a huge need in the market right now. As I mentioned in the introduction, there's a lot of tokens that are not working out really well because they, didn't, they just were beaten down from the market, and they didn't have any rights really installed into its token, which is 99% of all the tokens out there.
Well, because if you do, then you've created a security, right? Like there's a real reason why even well-intentioned people did not go out and do that stuff, right?
Yeah. So how do they fix their shit? That is basically my question.
Yeah. I mean, it's a very good question. The answer is yes, that there is probably going to be a spectrum of like what we constitute as an ownership coin. Anybody can adopt Futarchy for their token, for their treasury, for their,
true. For the decision-making process.
You can do that. And people have adapted it. Sanctum, for example, said, we'll honor the results of the market. Jito used it for voting, so in supplement of traditional voting. So you can do that. And then I'm working with teams behind the scenes on like how to do the full conversion over. And then like, what does that actually look like? So, can we transfer intellectual property over so that this is governed and directed underneath that? Can we turn over treasury? One of the key questions there is like, we used to do, fixed supply tokens, and, MetaDAO has mintable tokens, which are more in line with what like stocks and shares are. Can you imagine if Facebook couldn't close their deal with Instagram because they ran out of shares to issue? Like it's like, sorry, we're out of shares, we can't do it. But we do that in crypto, and we're like, why isn't this working? So yeah, like definitely a way to do that. I definitely would love to work with teams that are interested in it. I think the biggest thing is that when a team has an existing token and they want to do a fundraise, that is like where I don't think that I can help you very much, right? You can convert the token over, you can do a fundraise through Futarchy, but I can't relaunch you with an existing token in the ICO, like the ICO platform.
Yeah, at least there's no elegant way, obviously, to do that.
It's hard, right? Like, because people ask me and they're like, yeah, but that token's not doing anything anymore. And I was like, yeah, so you want to rug one token to come into an unruggable token? I'm like, nah, like I don't think that this is on brand.
Yeah, it is not. Yeah, but there is definitely I see a opening in the market right now for a set of projects that are actually doing really well in business, but they launch tokens that are, structurally not working because of the, tokenomics, whatever you want to call it, but actually the economics behind the token, right? And the market timing together with, it's a few factors. But then the business is doing well. And then they're like, yeah, fuck, I'm in this corner now, driven to this corner. So what do I do? So there's actually a need that I'm just observing. And I wish we have projects like MetaDAO or other of these new emerging token launch pads that are trying to innovate again when it comes to token launches, to find a way to at least do something. It doesn't need to be perfect because it won't, right? You can't you can't offset a mistake, right? You can't just make a failure vanish, right? But you can always find a way to do something better than nothing.
Well, I mean, and like here's the marginal step above that is like buyback. Like let us burn all of the money that we're making just to showcase that we care about this token. And you're like, brother, like, are you really telling me that you have no better use for that cash and you've solved all of crypto's problems and you've solved scale for yourself, that like this is really what's important for you? And it's just such a weird evolution for it to happen, right? Like I get it when you are making pump millions of dollars a day, like there probably isn't anything that you could do differently, right? And that probably makes sense. But for like a token that's generating $10 million annualized, to use all of that to buy back, it's, you're like, this does not make much sense.
So
and you can't do it because everybody's going to ask you why you're not doing it when these other people which are successfully doing it are doing it, right? Like,
so you're strictly against buybacks for all these kind of projects that are not on pump level?
I think that it's ill-advised, right? Like, I mean, like there are some very big companies in the world that do buybacks, right? And that's usually when they have nothing better to do with the money.
Yeah.
They're
not growing anymore.
Right. Or, like you there's literally nothing you can throw it at. And if you're at a scale that you are making that much money in crypto and you can't do anything else, probably makes sense. Uniswap is probably fairly mature for them to buy back their token after so many years. Maybe it's a sign of good effort, good faith. But like outside of that, I think that we should be like, until all of us are at 200 million active users, I don't think that like we've fixed it yet. And, we should just be burning money. And then I think that it sets a poor precedence for like capital expenditure, that like, like it's funny that token voting will complain about a $10,000 a month salary for somebody, but then they won't complain about buying back token and burning,
it's a bit money. So, it is. Yeah, I think it's an incentive issue here, that like, because you have to believe in asymmetric returns down the road. If you vote on something like a $10,000 salary, maybe I'll get it back some after the good decisions have been made with this great person in leadership. But the buybacks I'm going to feel tomorrow, hopefully.
Right.
Like
but like, look at the ones that are, like,
it actually doesn't work. Yeah.
And then what happens if you decide you want to stop it, or you need to stop it because your revenues plummet, right?
Yeah, it's like cold turkey,
right?
You're basically getting off the hype.
I think it is just like, when we talk about these like poor token designs or tokens suck, like there's a reason that they do, and like blindly following the previous existing models is like, just, we've done it just because that's what everybody else has done, not because we've actually sat down and thought about it deeply. So
did someone do buyback votes on FutureKey, like of your existing tokens? Did someone ask for? No one asked that question yet. Like, hey, can we do some buybacks?
No, but if you were going to do a distribution, I think that like buybacks are incredibly elegant for that, right? Like if you said, hey, like we would do a per share dividend in lieu of a dividend, I think a buyback is like the better tax efficient structural thing to be able to do for token holders and for the business. But like, why are you issuing a dividend if, you know, like if things aren't like really going extremely well? So like there is an argument to be made there, but like I think that should be on a semi-annual basis and at a set dates and per, you know, like but at that point you really are a mature business, and
Yeah.
you know, that's probably like to be expected. But other than that, I think right now it's just it's a losing battle that's driving, you know, just driving value out of the market.
Fair, yeah. Colin, we're getting to an end of my timer here, so I want to just maybe towards the end of the year now here for MetaDAO, and your personal year ends as well. What's 2026 looking like? What are you excited about for next year when it comes to MetaDAO as well? Do you see any big thesis, big prediction of something changing in the market that you guys will follow through? That MetaDAO is just gonna, you know, be part of, like when it comes to Solana and the ecosystem we're in. And if yes, please elaborate. If not, then what's on the plate for MetaDAO itself?
Yeah, no, I mean, I do. I think that you know, like blockchain, like where you could trade assets, like you as a user don't care where it is, right? Like as long as you just our user experience on wallets and everything sucks. It's terrible. As good as everybody's made them from where they were, it sucks. Like an average user, you're like, hey, where can I buy Meta? Hold on, let me get you to download Jupe. All right, let me explain what a DEX is. Let me explain what a router is. But you know, like my thesis here, or like my idea, is that we will have a traditional business in the real world with real assets, fixed assets, hard assets, will raise with MetaDAO. So it will be a brick and mortar business that like has scalable revenue that is off chain, and it will be able to bring all that stuff on chain. And the important thing there, I think, is that the token doesn't need to have utility, right? Like just like a share, you own a share in a Robinhood app, you know, you get a Meta letter mailed in the mail and you do a vote, shareholder vote, maybe, you know, like whatever. But like here is the place where you're, you know, like market oversight is done, and, you know, share issuance is done. And basically it's like, it's just it doesn't even calculate in your mind that like it needs to be anywhere else or anything's done. It's just, this is how it's done. So I think that's closer than I expected, just given like inbound, and a few interesting parties have already reached out with that. But I think that really unlocks crypto in a new way, because we are just like literally saying you can raise, you know, like for a serious business on the internet from people across the internet. And if you get that, man, like how many startups are there? You know, we're not talking crypto startups. It's like real startups that want to raise money and do impactful things. I think that's the future.
Cool. Looking forward to that, Colin. Thank you so much for coming on today and sharing some of your insights and answering some of my difficult questions here that I had to ask. I find it very interesting, honestly. I could talk much more with you. I will probably at some point, hopefully, talk much more with you. So thanks for coming on to Soul Brothers. Has been a pleasure to host you.
Thanks for reaching out. It's been too long since we've got a chit chat before.
Exactly. So I wanted to use the opportunity here to get you on the pod and also have a chat with you again. So, ladies and gents, thank you so much for tuning in to Soul Brothers. If you're watching this right now on stream, then we will say goodbye. If you're on YouTube right now, then make sure to hit that subscribe button and give it a like. It helps us a lot to grow the podcast, and follow us as well on Twitter. Huge shout out to our partner Solflare, because they do have a nice UX, Solana name service, and Flash Trade, where you can trade up to 500x on your tokens. You shouldn't do so, but you can. With that being said, we will see you at the next one. Peace out. Thank you so much.
See ya. Bye.
Cool.